Steep fall coming through on the rand yesterday, and that taking the local unit to fresh one-week lows against the dollar, even though we have the dollar pulling back. A clear enough indication that the Greek debt crisis is still dominating investors' minds here?
Well, I would ascribe yesterday's events to a combination of things. So firstly, yes, it does seem that investors started to pay a bit more attention to the deteriorating situation in Greece, but also recall that we had some very disappointing UK GDP numbers out yesterday, and I think that really fueled the bulk of the rand's decline that we saw yesterday, sort of mid-morning, early afternoon. So I think it really was those resurgent growth concerns coming to the fore after it emerged that the UK economy had contracted a much sharper margin than expected in the fourth quarter. Of course, we are expecting that Europe, if not already in a recession, is going to experience a recession this year. So those numbers weren't altogether surprising, but the market reaction was quite sharp.
Overall, though, Nomvuyo, we had risky assets improving, or sentiment around risky assets improving yesterday, and that with the comments that came through from the Federal Reserve Chairman Bernanke over in the US, and yet the rand ranked the worst performer in the session amongst 20 emerging market currencies that are tracked by Reuters. So how are you rating its performance right now relative to those compatriot currencies?
Well, it's certainly true that the rand over the past week, in fact, has been a bit of a laggard in this risk rally, and has consistently, for instance, failed to make a sustained break below that 790 level, although there have been persistent attempts. So it certainly is true that the rand hasn't perhaps performed as well as other emerging market currencies, and it's also worth noting that the rand's strength over the past week has been primarily against the dollar, and not necessarily what we're seeing against the other crosses. And of course, there are lots of reasons as far as the South African fundamentals, South African economy are concerned, lots of reasons that do count against rand's strength, and that's part of why we've been saying that we expect a broadly weaker rand in the first half of this year, although there may be brief periods like this when the market mood is quite firmly risk on, and then the rand starts to experience short periods of strength.
But overall then, a catch-up potential for the local unit to those compatriot currencies limited.
I do think that there is room for catch-up potential for the rand, certainly, but there are, as I would describe it, as limited as well, given the rand's domestic fundamentals that aren't really supportive of rand strength.
On the data front here in South Africa today, we're anticipating PPI numbers for December, and the market expecting that PPI number to hold steady at 10.1% year on year. What are your expectations on that front?
Well, we're expecting a brief moderation in December. That would be largely due to base effects that we're seeing coming through. But we still do see that the overall trajectory in the PPI is being firmly upwards. So we've penciled in year-on-year growth of about 9.5% in December, and that would be down from the 10.1% in November that you had indicated. But looking forward into 2012, of course, with the rand having depreciated in the second half of last year, with electricity prices still putting significant pressure on inflation, and of course commodity prices making up quite a big chunk of the PPI basket, we do still see much room for an upward trajectory and further increases in this indicator.